Get ready for a monumental shake-up in the housing market like we've never seen before. The delicate balance between the supply and demand of housing is on the brink of a transformative event that will leave homeowners, buyers and investors stunned. Today I'll dive into what exactly is going on with the housing market, why we're on the cusp of an unprecedented event taking place, and where that could leave the market further into the future. The Case-Shiller US National Home Price Index has started its steady descent from the peak that we saw last June. However, the decline of 2.8% that we've seen so far is rather lackluster considering how expensive and unaffordable homes still are for the average household, as well as how much various economic metrics have changed in that time. As with most things, house prices are determined by an equilibrium in supply and demand, and an increase in demand will drive prices up, but an increase in supply will push prices down, and vice versa. It's become fairly clear though that a low supply in homes right now is artificially propping up the housing market and keeping home prices high. If we take a look at the current housing inventory levels, we can see that the number of active listings is 563,000, which is less than half of the number of active listings in 2019 and the years prior. A recent Redfin report also really highlights how a lack of inventory is keeping home prices afloat, and in this report we can see that Redfin's active listings data paints a similar picture of being far lower now compared to in 2020. There has also been a sharp fall in the months of supply available on the market, falling from around 4 to 4.5 months at the start of 2023 to now being at just 2.7 months of supply. A lower supply level means that buyers are fighting over a smaller pool of homes on the market, and it gives more power to the sellers to charge a higher price given the lack of choice that buyers have. At the same time, buyers are pressured into making higher bids for homes that are on sale because there is less choice available to them and there are other buyers competing with them for the same home. All of this leads to home prices being inflated higher than they maybe should be, and it means that despite a fall in demand for homes, the stubborn low supply levels are propping up the housing market at the moment. However, all of this could be about to change big time, as there could be a big influx of newly constructed homes about to hit the market in the next year or so, judging by the current data. Now, looking at this chart showing the current housing units under construction, we can see that there are approximately 1.7 million housing units under construction, which is extremely high relative to historic data and is just short of the record all-time high. Now, single-family units under construction have started to tail off a little bit over the last year, but remain the highest that they have been since 2008 at 716,000 and still well above the levels that they were at before the pandemic. And as for multifamily units, they are pretty much at new all-time highs, with just under 1 million units under construction right now, only beaten by the peak back in 1973. And when we look at housing starts, a measure of homes that are not necessarily under construction just yet, but have been granted building permission to start, we can see that we are once again at elevated levels. Single units have fallen back down to 2018 and 2019 levels, but are still much higher than what we saw in the early 2010s. And as for multifamily units, the number is still climbing, and pretty much the highest it has been, even higher than what we saw in 2008. All of these new homes that are set to be offloaded onto the market by home builders will not only fix the undersupply issue when it comes to the housing market, but it could also completely tip the balance in the other direction to the point where there is an oversupply of homes without the demand there to match it. We know that housing demand is low right now compared to recent history. This Mortgage Purchase Applications Index is a great indicator to where demand is today, as it shows how many people are applying for a mortgage. As you can see from the current data, demand has certainly fallen off a lot compared to where it was over the last few years, which backs up the fact that low supply is propping up the housing market right now. And when it comes to this new supply of homes that will be hitting the market over the next few years, we know that it takes a lot of time for a house to be built from start to finish. From creating plans to getting planning permission to starting and finishing the construction, it can take many years, and over this time the economy and the state of the housing market can change drastically. Many of these homes that are being finished right now were started amid a booming housing market in which many people had lots of savings available to them to buy a new home thanks to the pandemic, but the housing supply was dwindling at that time. It does look like home builders may have gone a bit overboard with building new homes when economic conditions were much more rosy, but because other home builders had a similar idea, there could now be an oversupply of homes hitting the market in the future. One example of how economic conditions have changed is with the surge in interest rates. When many of these new homes actually began construction in 2020, 2021 and even in early 2022, the interest rate was close to zero, and because of that, the average 30-year fixed rate mortgage was in the range of 2 to 3%. Had the interest rate stayed at this level, the cost to home buyers would be much lower and therefore homes would be much more affordable compared to today, meaning that demand would be higher and home builders would have been able to sell for a higher price. However, because rates have surged so much over the last year to the point where the average 30-year mortgage rate is now at around 6.4%, home ownership is far more unrealistic for many people. And even those who can afford it have weaker buying power now, as they are much more stretched within their budget and in some cases are struggling to actually afford to pay their monthly mortgage payments. A $500k mortgage at the current 6.39% 30-year mortgage rate will result in a monthly payment of $3,552, about $1,000 more per month compared to the $2,536 that you'd have to pay every month on a 3% mortgage rate. That is a massive difference in monthly mortgage payments now compared to a couple of years ago, and unfortunately for home builders, they're going to have to offload their new home supply into this high interest rate market where mortgage rates are very elevated. This can also be seen in the most recent Redfin data, which shows that homebuyer housing payments are up 9.5% year over year and are the highest that they have ever been right now, far higher than in previous years. The buyers that the home builders are selling to have less buying power, and therefore the home builders have less pricing power, as their customers simply cannot afford to pay what they once would have been able to when mortgage rates were half the size they are today. Another major factor behind the current housing inventory shortage is the fact that many people are locked into their current home right now because their current mortgage rate is much lower compared to today's current market rate. As discussed earlier, the difference in monthly payments on a $500k mortgage is approximately $1,000 higher a month today at a 6.4% mortgage rate compared to the rate of around 3%, which many people who have bought a home in recent years will be on. That is a 40% increase in monthly payments, and many households simply could not afford this, as an extra $1,000 coming out of your pocket every month is just not doable for many people. It's because of this reason that many households are kind of trapped right now and locked into their current home, as they simply could not afford to move to a similar priced home. Unless you are fairly wealthy, many of the people who are moving home right now are doing so because they are forced into it for whatever reason. Maybe it's because they need to relocate to a different part of the country for work or family reasons, or maybe they're getting a divorce. This is therefore slowing down the supply hitting the market and means that there are less overall options available for buyers at the moment. Eventually, when interest rates do fall though, this is going to free up a lot of lockdown homes, and many people who simply want to move will feel more like doing so when they can get a lower mortgage rate that is more in line with the one that they are currently on. One other wildcard that is at play right now when it comes to the US housing market, as well as the US economy on the whole, is the pending debt ceiling situation, in which the debt ceiling has not yet been raised and there is still a risk of a debt default. Now, Zillow does project that in the event of a US debt default, there would be a sharp surge in interest rates, which could see mortgage rates spike to above 8%. They also project that unemployment could surge from the current 3.5% to over 8% by autumn of 2023. This could ultimately cause home sales to plummet by 23%, while home values could immediately dip by 1% and ultimately end up about 5% lower at the end of 2024 compared to the baseline forecast. A US debt default would certainly have catastrophic consequences on the economy, however the odds of it happening remain fairly low for the time being. There is also some very concerning data around Wall Street home buyers and other large institutional investors in the housing market. It appears that many of these investors could be preparing to pull out of the housing market in a mass exodus that could send shockwaves through the entire real estate market. I go into details in my recent video, which you can check out by clicking on the screen right now. Aside from that, please do leave a like on the video if you enjoyed it, that does help out a lot. Also be sure to subscribe to see more videos in the future, and thanks a lot for watching.